Good morning. My name is Pam Tipton. I'm one of the directors here on Emory Executive Education's team, responsible for our custom programs here at Goizueta Business School. And we are so thrilled to have you back, especially during this holiday week. So today we are going to have our focus be on purpose versus profit. So in a world where it seems like maximized shareholder value rings down the halls of so many of our corporations, we're seeing a shift in investor expectations, trading off that short-term view of profit for a more longer-term view that considers the benefit to all stakeholders, including shareholders, employees, customers, communities, and the environment in which companies operate. An increasing number of leaders, especially the younger ones, if you will, are saying that their organizations are really in the business of improving people's lives, saving the environment, serving their communities, and other higher purposes. But that begs the question, is there a way for purpose and profit to go hand in hand? And how might pricing strategy serve as our matchmaker, so to speak? How might companies adopt a more forward-looking mindset, leveraging a pricing strategy that's aligned to growth, social change, and profitability? Well, to explore these ideas today, we're excited to welcome back to Business Over Breakfast, Saloni Vastani, Associate Professor in the Practice of Marketing. But before I say a bit more about Saloni, we've had people ask, what does Professor in the Practice actually mean? This distinctive title is reserved for non-tenure track faculty who possess the expertise and achievements to provide professional instruction that integrates academic scholarship with the field in practice. So you're going to hear lots of great insights from Saloni today. In her case, she joined Goizueta a little more than 7 years ago after an extensive career in corporate America that spanned across business strategy, M&A, product development, pricing, and analytics in both domestic and international markets. She even founded a startup along the way. Her research centers on pricing strategy and innovation management with an overarching interest in ESG. In addition to her research, teaching, and consulting work, Saloni has a passion for community service and for travel, having visited more than 30 countries, and she is fluent in 5 languages. So we want to hear more about that, Saloni. We are thrilled that she has invited a distinguished guest to join her in the conversation about midway through today, Chuck Davenport, who's a partner at Bain Consulting. And Saloni will fill you in a little more about Chuck as he joins the session today. She'll spend about the first 20 to 25 minutes sharing her research and experience-based insights. And then Chuck is going to join for a fireside chat, followed by open Q&A. And throughout the session, we invite you, as always, to put your questions in the Q&A box, and we'll do our best to get to as many of those as possible because Saloni is inviting those questions along the way. So before I hand the mic over to Saloni, 1 or 2 quick other things. As always, like to remind you about some learning opportunities. One is our MBA level courses. We have a limited number of seats remaining, and registration is still open until July 28th. You can check those out online. More information will be available in the chat. And as well, registration for our Executive Women's Leadership Program is also open until July 28th. And I'll talk a little bit more about that at the close of the session. Thanks again for joining us. And Saloni, thank you for being with us. We look forward to hearing from you. Over to you.
Thank you, Pam, for that fabulous introduction. And thank you to all of you for joining so early in the morning on a long weekend or a long week that we've had so far. I know everyone's catching up with work after losing a couple of days this week. So thank you for joining. And as Pam mentioned, I come from practice. And so I hope the session today is very practical and what you can take away and directly apply to what you are doing. A little bit about me. Here as I move. I have had extensive experience in consulting across industries and actually graduated from Goizueta many years ago So it's almost when I came back 7 years ago, was like coming back to family and coming back home. And there couldn't be a better option for me than to start the pricing curriculum at Emory, and we've been able to grow it from an MBA level to undergraduate to an executive and evening MBA program. So very excited to pass this passion that I have along. As my kids call it, I picked the most boring part of marketing, which is pricing, although I think it's the most fascinating part of marketing and one that has a direct impact to the bottom line. In terms of our agenda today, what I'd like to cover is start off with kind of setting up this dilemma, kind of sharing with you the journey that how I came across this issue and some of my thoughts as we were delving into how to solve this problem for a particular client. And then I want to share with you some solutions that you might be thinking about or might have experienced in, or you may be wanting to implement with a new product that you're launching, or maybe a current product. And they take into account not only profit, but also thinking about the planet and the people, and how to kind of bring all of those aspects, which kind of seem contradictory to each other. But how do you think about that holistically to make a decision that is not only good for business, but also for society and overall the communities that we live in? So that's sort of the plan for today. I hope you can post some questions and chat, and every now and then when we come to a stopping point, I'm going to take those questions. So if you don't get around to it during the presentation part, we'll definitely tackle it at the end. So I'm hoping to set this dilemma up for you for the first 20 minutes or so, present some solutions, and then we have Chuck Davenport, who's a partner at Bain Consulting, joining us, and I'll tell you a little bit more about him and his fabulous experiences so far as we go through our morning today. So how many of you, and you can drop in on chat, how many of you feel like this is a dilemma between profit and purpose? Anyone working on a particular project related to it, or you feel like there is this tension between those two? Please share it in chat. And as I set this up, as one of the consulting companies that I worked with, and the issues we had along the way. So I was working on a project with my students with this company based out of Atlanta, a big Fortune 500 company, Georgia Pacific. They were looking to launch a paper towel, which is 100% compostable. Many of you may have used the Brawny paper towel or seen that man with the strong strength that Brawny has. And Georgia Pacific had come up with 100% compostable version of this paper towel. They approached us to help them figure out how they should price it in the market, how they should be thinking about launching this product, given their internal company goals, the retailers that they worked with, which was Walmart, Publix, Costco, all of those, and the competitive landscape that existed. The leader in this space, as many of you may have heard of the name Bounty, is the leader. There's also several private label brands that exist, just Kroger brand and Target brand and all of those. And Brawny is kind of on the third level in terms of market share, but was losing some market share, in hoping that this 100% compostable version may be a differentiator for customers to buy. So some of the research that we did involved looking at conjoint analysis and studying what preferences consumers have. And we're wondering how we should think about pricing this. Should we price it at a premium, which would capture some of the competitive advantage developed by this new product? Or should we price it the same as the current brownie, or maybe even think about pulling the current brownie out of the market and replace it with this new product, which is 100% compostable? There were several concerns as we were thinking about this. One was, of course, the price aspect of it, whether we would lose market share, or with how who would pay additional for it. Would that be cost neutral? Would that be profit neutral? Will people actually buy this product, or adding some sustainability claims on the product will diminish some of the performance perceptions people have? Because most people think that products that are eco-friendly may not be as good. So that is some of the studies that we did, and we came up with a recommendation. As we go through some of the next slides, I want you to keep that question is, what would you do if you were in that situation when you were launching a product that was better for the environment, but you were not sure at what price you would launch it at? You were not sure if you should tell the people whether it was environmentally friendly or not, because you might affect their performance perceptions of the product. And how would you go about thinking about this sort of an issue? So these were some of the three options, and I'm going to have you share some of the ideas on these four options as we go through this presentation. But I want you to keep thinking about it as we're talking about some of the next issues around profit levers. I see some questions coming in saying profit is not negotiable. I don't feel it's a dilemma by Greg. We have to drive purpose and ESG, as you cannot grow and succeed without it. Totally agree. And we'll tackle some of that issues and how to balance both those price and profit and profitability. Before we go there, I have a pop quiz for you. And this was a study that was conducted by McKinsey. They looked at over 2,000 companies across all industries, across B2B, and looked at if you had resources to make 1% improvement, okay? So for fixed cost, that would be reducing fixed costs by 1%, or increasing price by 1%, or increasing volume by 1%, or decreasing variable costs by 1%. Where should you put your time and energy and resources? Any guesses on what would have the highest and the lowest impact? And I'm looking at chat. Fixed costs. Zach says fixed costs and volume. Amy Walker, price, nice to meet. Good to have you here, Amy. Volume, variable costs. So as Pam mentioned, I'm a pricing professor. So I picked this study because pricing is number one. Okay. And price has the number one impact on bottom line. For just 1% increase in price can actually have over 11% impact and increase in bottom line. And I'm going to walk you through some analysis there shortly. The second one is variable costs. If you had limited time and resources, you would want to put in reducing some variable costs. And third is increasing volume by 1%. And the last impact is fixed costs on 1% improvement. Price not only has number one impact, but it's significantly more than some of the other variables. The study said just 1% improvement in price realizes on at the bottom line at 11% increase in profit, because everything that you increase in price and without losing volume, it flows directly down to the bottom line. And you can take home that increase. And in many cases that I've noticed is customers don't even realize that you increase the price by 1%. They're not even noting or capturing that change, but it has a big impact on your bottom line. I want to walk you through this example of how this would be. So imagine you are in, do consulting for a hotel. The price per room is $100 daily. The cost of the room is $90 a day. Profit is $10, approximately 10%. If you increase price by say 5% or $5, effective price then would be 105. Revenue increase in this case would be $5 more, and profit goes from $10 to $15, almost a 33% increase, a 50% increase from the previous. So as you can see, the small increase, just a 5% increase on the top line can realize a 50% increase to the bottom line. A similar study was done for business strategy review, and they looked at 10 companies, and you may recognize some of these companies. You have Amazon, Best Buy, Boeing, and noted that just a 2% increase in price realized on around 14% average increase in profitability for these companies. Because the smaller your margins are, the bigger impact a small price change would have on your bottom line. However, when pricing strategy is not done right, it can also have devastating impacts on the company, business, but also for society. JCPenney comes as one of the examples. All of us have probably at some point been at JCPenney, maybe bragged by our grandmothers and mothers for the deals that they had, the coupons that came out, and always gave customers a sense of the good feeling that they were getting a good deal out of it. A few years ago, JCPenney ran into some issues with some of the digital revolution with Amazon, and they really changed how they wanted to do things. They got a CEO from Apple called Ron Johnson, who came in, really changed the face of JCPenney, changed the store's layout, put hardwood floors, made it actually look like more like an Apple showroom, took away all the discounts, and gave people the actual price of what they would have gotten with the discount. It took away some of the coupons. And you may have heard about what that may have done to JCPenney. The customers actually went to JCPenney because they loved those deals and loved that feeling of getting those deals. So when the coupons were taken away, although they were getting the same price, they stopped going. And several of the stores closed down, and JCPenney filed bankruptcy. Another company is MoviePass. You may have heard of it. I know several of my students subscribe to this. It is a company that $10 a month you could pay for and watch unlimited movies in any theater possible. Regal, AMC, new movies, old movies, for just $10 a month. The monetization model in the background, however, did not align with their pricing strategy. So when you actually went and signed up for a movie, so say Spider-Man just came out and you paid your $10 a month and you wanted to go watch Spider-Man, and you went to the MoviePass website and bought a movie ticket, MoviePass in the back end went and purchased a ticket from Regal Cinema at whatever $14 a ticket, because it was prime time, movie time, and reserved it for you. You can quickly see that the cost of the movie ticket was higher than the subscription price you paid. A monthly did not align, and MoviePass failed as a result. Some of the other strategies they were hoping for, breakage, data monetization, did not come through, and they had to file for bankruptcy and shut down. And Apple, I'm a big fan of Apple in terms of how they price their products. They're able to get some good market share, but they also messed up with the iPhone 10 pricing. They crossed that $1,000 threshold, which was a big psychological threshold for many, people and how to kind of bring back on some of the production of the phones. And the last example here is EpiPens. Some of you may have seen it. Lots of kids with food allergies carry it on them. My son has food allergies, so we're always carrying this with us. The price of EpiPen in a 10-year period went from $100 to $590, making it unaffordable for many families to be able to afford this and buy it. And this is a life-saving medication for children and adults that have food allergies. Mylan was the company that bought EpiPen and steadily increased price over time, which had grave consequences for healthcare and for many families. And several examples in the pharmaceutical field, right, with Turing Pharmaceuticals, Daraprim, cost of insulin, which affect all of us living. So pricing can have, quick takeaway from here is pricing can have a big impact on the bottom line. A small increase in price has pretty significant impact on the bottom line. But when pricing strategy is not done right, it can have devastating impacts on the company, from shutting down a company to actually having health issues and health care issues for society. I want to jump a little bit into purpose. And most of us have heard of purpose. I want you to be thinking about, what do you think about when you think of purpose? What are some of the words that come into your mind? If you could add them to chat. I've added some of the words that come into my mind when I think about purpose. What do you think when you think of purpose? Corporate social responsibility is one triple bottom line, where you're looking at not only profit, but also looking at people and impact to planet, sustainability, environmental sustainability, stakeholder capitalism, ESG, environmental, social, and corporate governance, and impact-weighted accounting. Do any other words come to your mind? If you could add them in chat, that would be great. Values, good, Daniel. Values, because values drive purpose. Doing well while doing good. This is why we do, right? This is why we. Jerry, good to see you. Purpose and why the company exists. Very good. And you have several companies. Any companies that come to mind when you think about companies that have done well with purpose, or maybe not done well? Chick-fil-A is a good example of companies that stay and have a very clear roadmap on the values. Publix, Home Depot, Patagonia. I often use the Patagonia example. Tesla, yes, Ben and Jerry. Clorox, and most people don't think about Clorox, but they own Burt's Bees, and they've done some really good product introductions. Good. I'm not going to jump. I'm going to spend a lot of time on purpose here, but it looks like most of you kind of have a good sense about what it means to have a purposeful company. There are some direct benefits, just from a corporate standpoint, of having a very clear purpose. As research has shown, it results in higher customer loyalty and trust, higher employee engagement. I know most of my students want to work for companies that are doing the right thing, that are producing products well, treating their companies and employees well. It attracts talent, stronger reputation, and stronger stakeholder relationships across the supply chain. Unfortunately, this has increased costs for many of the firms, right? Impact-weighted accounting, sourcing the raw materials the right way, has all added to costs, and profit is important, because that's how companies can leave their lights on and continue to provide that paycheck and healthcare benefits to employees and those jobs. Although all of these things are really good, they do add additional costs and resource burden to companies. And what we want to do is spend the next 30 minutes or so discussing how to think about this and how to manage this dilemma and still do the right thing and still keep the company lights on. With that in mind, I'd like to invite Chuck Davenport. Chuck is a partner at Bain Consulting and a pricing expert in the field. And he has had tremendous experience in this area across industries, across B2B, B2C. And he is an alum of the Emory Business School. He has he is a partner at Bain, starting the pricing strategy practice there, but also was the founding members of Deloitte's pricing strategy practice. So with that, I'd like to welcome Chuck to the conversation. Chuck, welcome.
Thank you, Saloni. I appreciate the opportunity. And I think that Randy was actually able to join us as well, Saloni. I don't know.
Yes.
Like she's on.
Yes, I see Randy on. I don't see her. So Randy, hey, good to see you, Randy. So let me give you a quick introduction on Randy. Randy is an alum of Emory as well. She now is a member of board of directors of Global Scan and NYU's sustainability program, has done some amazing research on B2C areas of eco brands and how they have adopted in some of the strategies that companies have used to make products more available and specifically messaging. So welcome both of you and join the conversation.
Yeah, glad to be here.
Lovely being here.
Let me start off with asking you, how do you think about this dilemma between purpose and profit? How have you seen that sort of evolve over time?
I'll take a shot, and Randy, you can correct me where I miss. But this is something that I've been thinking about for a good while. Started running into clients that have specific internal goals. Certainly, when we think about the environmental side of things, scope 2 and scope 3 targets are going to be coming down the line at some point, and those take some time to prepare for. The dilemma really has been, in a lot of cases, not a desire to do the right thing, but a part of what Saloni was talking about earlier, which is really how do we do it and do it in a way that doesn't damage our business? Because all of these businesses at the end of the day are going concerns because they have access to capital. They have access to capital because they can generate profits, because that's what investors are looking for. Now that is evolving to some degree, and that profit doesn't necessarily mean financial dollars, but at the end of the day, if you run the economic equation all the way out, there have to be some profit dollars at the end of the day that support the underlying investments that people are making. On the other hand, there are things that need to be done. There are things that need to be done from a justice standpoint. There are things that need to be done from an environmental standpoint that are just fundamental and to some degree existential for different businesses. And so our clients have really started to struggle with this. The challenge, and often I think the error that I see companies make, is that there's a separation between how they think about their purpose and their purpose-driven efforts, especially around things like ESG and their core business. Let's take a chemicals business, for instance. Core business is producing polymers. The vast majority of that polymer is produced from virgin material, meaning it hasn't ever been in circulation before. A lot of these polymers are fundamentally, I mean, we think about them as forever materials, right? They don't degrade, they don't biodegrade, they don't photodegrade in any way. They're going to be with us once they're produced. They're going to be with us for a very long time, perhaps forever, which begs the question of, well, okay, can we find a way to create circularity there? In other words, taking in the old feedstocks that have already been used, break them down, and there are a couple of ways to break those down, either physically or chemically down to the molecular level, and reform them into new feedstocks for new products. And the challenge is that it's actually much more expensive to do that, because for a couple of different reasons. One, it just adds steps to the manufacturing process, but two, there's actually a shortage of the feedstock. We're not recycling enough material to be able to feed and supply enough for them to be able to have 100% circular materials. And so there's a dilemma there in terms of how do I drive that business forward, and how do I manage it in such a way that's going to enhance my bottom line, and give me back what I need to be able to build this as a long-standing business, not something that's just a good thing to do because it's the right thing to do for the environment. It's a nice mindset. It's not a business reality. And the reality is, an individual company can't on its own unilaterally say, hey, I'm going to do this, I'm going to price higher, and there's no way for me to force you to pay, force my customers to pay a premium on top of what they do for this new product. And so it requires a full view of the value chain and the ecosystem to really understand and think through, how is it that I'm going to build a sustainable business, sustainable in the sense of longevity, not in the sense of environmental responsibility. How am I going to build a sustainable business in an area where there's a cheaper competing product, even though it's worse for the environment? Yeah. And so that's the struggle that companies are having as they go forward. Go ahead.
As you think about this, you already mentioned some solutions, right? And this is an issue that faces a lot of companies where costs are higher to produce R&D raw materials. And one of the solutions here is to charge more, right? So introduce that new product, and many companies have sort of done that, is introduce this premium product for customers that are willing to pay more to buy it. And that actually is a good segue into Randy's research on some of the green premium. And what have you seen, Randy, in your work on how much green premium are companies able to charge for these types of products, or some of the CPG products that you've studied?
Yeah, so I focus my work on consumer packaged goods. I am a consumer packaged goods marketer by trade. And we look at transactional data by an organization called IRI, that, similar to Nielsen, that actually receives every scanned purchase in consumer packaged goods. And then we delineate which of these packages make sustainable claims and which do not, to understand actual performance of sustainable products, because in the conversation on sustainability, there's always a discussion, and my apologies if you already brought this up in my absence, but the say-do gap, difference between what people say they're willing to pay and willing to buy versus what they actually do when they go to the shelf and they're faced with the brand they know or a price that's cheaper, et cetera. But what we found is that sustainable products are growing year on year on year. For a few reasons. One, there's a few categories where the market leader has decided that they will adopt sustainable supply chains and communicate that to the consumer. It has to be communicated to the consumer. We find for it to be categorized as sustainably marketed in the work that I do. And when that happens, and we've seen that in dairy, and we've seen that a lot in personal care products like toothpaste and soaps and lotions, when the category leader starts to adopt these sustainable benefits, the entire category changes because it becomes table stakes for entry and participation. And I think that's something, Chuck, you were discussing. In terms of pricing, historically, we had seen a much larger gap between sustainable products and conventional products, close to 40% when we started to look at it. What's been interesting over this inflationary time is that the gap between those two has been reduced to about 28% on average in consumer packaged goods. And that's not because sustainably marketed products are rolling back their price. It's because conventionally marketed products, which often are these legacy products, who have been unable to take price increases in a non-inflationary, non-supply chain challenge time, because the Walmarts and the Targets and the food stores of the world won't just accept the price increase because you want to make more money. You have to justify it, and there was no justification. Now there is, so they've taken these egregious, in my opinion, large increases. Over the past year, I think if you look at the revenues reporting from consumer packaged goods, they have really lovely performance, because they talk about how they've been able to price and their revenues are above guidance or above what they had expected. But they're now also talking about some volume softness. So I think they've sort of hit the top of what they can do. And Walmart, who's the world's biggest retailer, has recently said that they're not going to accept any more price increases, and they're going to start to promote their private label or store brand more. I did want to bring up a couple points. Regulatory, particularly led out of EU, is definitely going to drive a lot of these global supply chains to more sustainable supply chains, because companies can't afford, particularly in, let's say, an agriculture-based company where there's probably 5 industrial agriculture companies across around the world, they will have to respond to the EU regulations in the same way car companies respond to California's regulations. So that's going to be an interesting one. The risk, I like to think of ESG, and then I'll stop talking, around or sustainability around risk for these companies. So yes, they may take some short-term hits, but when you talk about stranded assets for oil companies or unproductive farms for agriculture based companies because they've sort of raped and pillaged, that's an issue for long-term sustainability as it relates to environmental sustainability.
That's good, Randy, and thank you for bringing that up. That sometimes companies do have to take that short-term hit, and that's the only way to get over the hump. And during that time, getting your investors, stakeholders, shareholders aware and communicate what you're doing, that will help them stay in business, right? So they can keep doing the good things.
Yeah, I just am worried about this late sort of this woke ESG environmental discussion, because there's lots of concern about touting any of the efforts that they're doing to the street, because they're concerned about backlash.
Yes. We hope that that is a minority, and we can continue to make progress and don't go back to 30 years ago where profit was the only objective, right?
Yeah, because when
for
Chuck was talking about underlying investment, Chuck, I'd love your thoughts, because I think when, having been on, the industry side, when you're doing returns, you're doing it relative to your investment and what what are obviously direct benefits from that investment. So, if you invest in LED lights, you get the benefit of, lower energy bills. But what some of these bigger investments where it's not so tangible, I think that's where the opportunity is, because there's lots of intangible benefits, the circularity, the employee engagement, the getting the best and the brightest, innovation, all benefit, but not necessarily built into a return that justifies the investment.
Yeah, I think it's a really good point, Randy. And I think that's why we see acceleration in these markets when there are, I'll call them ecosystem stimuli. So things, it can be, you mentioned Walmart, it could be Walmart's, 2019 decree that 20% of packaging has to be recycled content for their private label goods by 2025. Or it can be the government and regulatory mandates that are, as you mentioned, are coming a little faster in Europe, but certainly are coming in the Americas as well. And those types of targets kind of force the issue. A good example of regulatory intervention would be in the energy markets, thinking about, as companies were developing sustainable energy sources, i.e. solar and wind and whatever. And I know there's still some controversies out there on that, but the fundamentals were such that, we weren't down the experience curve on solar panels. They weren't high enough efficiency. There wasn't enough availability of wind power. And so it was relatively scarce, and energy companies basically were trying to build those sustainable sources into their own networks because there wasn't really a mechanism to do that. But if we look at what happened with the green energy legislations that allowed for the production of green energy blocks that then enabled companies that are trying to support a triple bottom line could buy green blocks of energy at a premium, it created an ecosystem benefit where that, we could get down the S curve, the consumption curve, if you will, which got us down the E curve, which lowered cost to the point where now in about 2019, the cost of producing sustainable energy actually on a per unit basis went below the cost of the traditional ways of producing energy. And so, again, it's not widespread enough yet, and we've still got some things to figure out, but progress was made. And I think the same thing is going to happen with, green steel and low carbon aluminum. And so these are B2B parts of the business that end up, supporting the B2C. So again, the end consumer, the retailer, all of those have to support, this ecosystem of investment in purpose. And that's why that ecosystem idea is really important, and why it's important to think all the way through that supply chain. Who's my customer? What do they value? Who's my customer's customer? What do they value? And how can I pull those threads such that I can get the premiums that I need to be able to build a robust business, so that this is something that has longevity, not just something that's a flash in the pan idea.
Yeah, that's an excellent point, Chuck, about bringing the ecosystem along and maybe even helping educate the ecosystem and supply chain on managing to purpose. And I think Unilever has some good examples on how they have invested in some partnerships with their providers, and invested in those providers as well to help cost efficiencies along their supply chain. So I wanted to wrap up some of the solutions, so we can have some takeaways. We have green premium is maybe a one way to start with the innovation and recoup some of the R&D. Randy, you mentioned that there is higher customer loyalty, and that might be a good business case scenario. Higher growth because customers are preferring at the same price, maybe more environmentally friendly products. So that could be built into the business case for sustainability. You also have talent, right? That wants the good talent that wants to work for companies that are doing the right thing, a little more intangible in terms of how to measure it. And the regulation and government can work as a carrot or a stick. And if they work as a stick, then everybody has to, in the industry, has to manage to those expectations and the cross spread out across. But they can also work as an incentive in terms of providing subsidies and supporting some of the right things that the companies are doing. So looking at that as a resource as well. I have Pam joining here, indicating to us that it's time to open it up for Q&A. Pam, what do you have for us?
Well, so we've got just a few questions that I want to make sure that we get to. And one, I wanted to see if you wanted to circle back to I love, Chuck, that you brought in this whole idea of the supply chain, because David commented that really the conversation has been more oriented to that point around B2C, but what about B2B? And how might that message get pulled through, especially if it's a purely B2B company? So how, should they really be caring about purpose and sustainability and things like that? And why, and how might they create lift for themselves? What are you seeing?
Yeah, so number one, the big answer is yes, they have to be thinking about these things, because ultimately, even though B2C might be the more visible part, the B2C part doesn't happen without the B2B part of the value chain. Mm-hmm. And so if we go back to the polymers example, there are a couple of different ways for a chemical company to think about the incorporation of circular materials. They could think about, I'm going to produce a pure circular molecule that I'm then going to sell to the package creators. And I could do that as a separate and new and premium product, is one way to do it. I've had conversations with other clients that are thinking about, well, I could just commingle the molecules, the circular molecules and the virgin molecules together, and all of my materials would have a sustainable and circular component to it. Again, it goes back to business strategy, pricing strategy. The fundamentals of business don't change just because we're applying them to ESG related or sustainably responsible products, right? We still got to think through the full business strategy of how are we going to position our products, and how are we going to sell them, and how are we going to market them, and how are we going to price them, and what are the fundamentals there? Am I going to give different motivation to my sales force to sell my new fully sustainable goods, or am I going to expect a premium across my entire portfolio because I'm folding my circular product into every product that I make? Those are fundamentally different strategies. Both can work, but it doesn't work without making sure that I'm taking care of my own health as a company, because being sustainable for 2 to 3 years and then running myself into the ground is not as productive as getting a green premium and making sure that I'm a going concern for the long haul, getting myself down the E&S curve. And then, you know, it may be that in the polymers business, we never get to the point that energy got to, where that circular product is lower priced than the regular product. But because of some of those regulatory and other ecosystem impetus that they get, it can still drive demand for that product and therefore enable the green premium.
Great. Thank you, Chuck. I've got time for one more question, and we'll have to make it kind of a speed round, if you will. We had a question about, you know, again, a lot of the conversation has been around packaged goods, but what about other industries? For example, some of the service industries, utility industries, and et cetera. Can you comment on, you know, what you're seeing in terms of, especially consumers? Do they care about those other non-packaged type industries?
I think there's some. Go ahead. Sorry.
Go ahead, Chuck.
I was just going to say,
I
think there's some education to be done there. I think they absolutely should, should care about that, right? I mean, that it's just the right thing to do. In terms of consumer demand, though, thinking about the end consumer and then working back through the ecosystem, I think there's education, because I'm not sure that the average consumer thinks about, what is my bank doing to drive a purpose-driven organization. I don't know, but I think it has to start with that consumer, and there has to be a pillar of value that gets back to that sustainability, or it has to be driven top down by some kind of regulatory concern, like a scope 2 or scope 3 target that's going to have to be met at some point in the future.
Yeah. Well, Chuck, if I could just comment real quick, and Randy, I'll go to you, but we had in the Wayback Machine, if you will, we had a relationship with SunTrust Bank, and they became a purpose-driven organization under Bill Rogers' leadership. And their purpose was lighting the way to financial, I believe it was freedom, if I'm remembering correctly. But rallying around that was both their B2B business as well as their B2C business. And they invested their dollars philanthropically in that same direction. And so that message played out in terms of a social benefit to a lot of folks. And so I think there's a way to have that. It's kind of put your money where your mouth is kind of thing, so to speak, right? Randy, you were going to make a comment, and then we'll have to wrap up. I've got a couple things I have to share before we close.
Yes, I just wanted to say that there are some industries that are non-packaged goods that we should just think about, like the auto industry, where you had Tesla come in, and they didn't talk about necessarily being an EV and competing against a very small EV category. They talked, if you remember the launch of Tesla, they raced around the Autobahn with the fastest race car, and they pulled a 747 across the US, and they talked about basically there's a car. So they wanted to, and power and design, and what's the beautiful part of why people buy cars. And by the way, it's an EV, and they've really disrupted and transformed the category. And I know there's a lot of work being done in the airline industry. So I do think, and then just, we didn't discuss, but all RFPs, so people who are focused on sourcing these efforts. And I'll stop talking, Pam, but RFPs is another way to drive a lot of good actors in your supply chain.
Right. Thank you. I cannot thank you enough, Saloni, Chuck, Randy, for joining us today. A very quick look ahead coming up on July 20th, how to become an inclusive brand with Emory Rodriguez Villa. On August the 3rd, surrounding yourself with career options with Donna Peters. And on, I said August 3rd again, sorry, August the 17th, my typo, my bad. Financial confidence, realizing a future of flexibility and freedom. Again, I also want to say, please check out our website for additional information on our programs that are upcoming, and registration deadlines are July 20th, both for our women's program as well as for our extended learning courses, our MBA level courses, one of which is Saloni's. This is just one of a number of great topics that she'll be covering in her MBA level elective course that you can register on and get credit for. And again, thank you so much for joining us today, especially during this holiday week. We hope you had a happy and safe 4th and continue to have a great rest of your week. Thanks again, Saloni, Chuck, and Randy.
Thank
Take
you.
care.
Thank you, Pam, Randy, and Chuck. I just want to make a big plug. I have a book coming out. So look out for that on this particular topic. And I look forward to seeing you in an online course this fall on pricing strategy. Thank you all, and have a good rest of the day.
Thank you. Bye-bye.
Bye-bye.
Bye.